Welcome traders back to the LiquidFX YouTube channel. Here we're going to be going over a new market, a new commodity that I've added to the overall watch list of mine, and something which I hope people are going to be interested in. It is US oil, or WTI crude, right? So this is something that I've introduced now to LiquidFX, to the members. And it's something I'm going to be going over publicly as well, giving some public outlooks as to how you can trade US oil, okay? So we're going to be going over a higher time frame outlook and some lower time frame scalp trades. These are going to be scalping oil, okay? So it's going to be a little bit different to perhaps the intraday swing positions that I normally take on the Forex pairs. Here we're going to be dissecting price very much from a scalping perspective, okay? So first we have to begin on the higher time frames, as we do. And this is how I have my structure marked up. So what we had over here is we had price giving us a low just over here. So this is a low which I haven't added. So this low here in black was broken down here. So this is our break of structure over here. Okay, here we have a clear boss, and we have another break of structure just down here as well. So this low also has been broken, right? We had one more break to the downside just over here. Now we had a very, very, very large wick just over here, but this was during the COVID time. And since then, we've seen that high that produced the low get broken to the upside. So now we're dealing in with weekly bullish structure, just like this, okay? So now that we have price trading from this extreme low down here all the way to this high up here, there's no need to project the Fibonacci tool from that low, because we understand this is a news event, right? This is a world-driven news event, okay? So now we're in an interesting region here on the weekly time frame, where we have an inefficiency down here, and we also have an inefficiency up here as well on the weekly time frame. This is our weekly fair value gap up here. So price is well within its rights at this point to head higher, or sorry, lower down to here, or head higher up to here. So the question now becomes, LiquidFX, how can we determine whether price is going to reach this POI or this POI? Now the answer is we haven't got enough information on that weekly time frame. So that is the reason why we're now going to head down to the daily time frame. Now the daily time frame will begin to depict price a lot clearer. So now we have our structural swings over here marked out on the chart. So we have a high, low, high, low, high, low, and now we've had a high just over here in this region, right? So we're currently operating between a structural dealing range from this swing low up to this swing high over here, okay? So with that being said, we need to understand one thing. We've come into what we call an extreme discount over here. So look at this structural range over here. So this is a discount. Anything below the EQ is a discount. With that being said, we have an extreme discounted low over here. So this low here is discounted, extremely discounted, okay? In fact, extremely discounted. So now that we've had a discounted low, what we've seen over here is we've seen price head up to the upside. So we've seen price react from the discount, and it's now headed into the premium. So now if I bring your attention to the most recent daily structure over here, what's the next drawn liquidity? So I've marked that out for you here already. This is the next daily drawn liquidity. And the reason why this is the next daily drawn liquidity is quite simply because we have a weak high over here. So notice how we have the low, which is intact. So this low over here is intact. This high over here tried to push down lower and could not break this low over here. So currently, as it stands, this is a weak high because it hasn't made a new low. So I hope people understand that. With that being said, we have a daily drawn liquidity all the way up here. So this daily drawn liquidity is at a minimum. I think oil is going to get up to 95.111, 95.111 as a minimum, okay? So we need to understand why, as analysts, we are looking for higher prices in the market. So this comes down to the IPTA, which I've been through on a lot of other videos. When it comes to IPTA, there's two things the market will look for, right? The IPTA, the interbank price delivery algorithm, will look to seek higher prices due to liquidity concepts and due to fair value gaps or inefficiencies in price, just like this. So we have a liquidity pool over here. Now, what makes this a liquidity pool? It's the fact that it's a high. So we know from basic SMC concepts that any high or low above or below it has, you guessed it, liquidity, right? So this then becomes the next draw on liquidity simply because it's a weak high in the market. It's failed to make a new low. Therefore, it's just a liquidity pool. It's the next draw on liquidity, as we say in ICT concepts. Now we have a fair value gap just over here in this region. We also have price giving a fair value gap over here, just over here. So this is reason for higher prices. And this is the reason why I think price is going to head higher. I also think price is going to head higher because we're currently in a daily discount anyway, right? We're currently in that daily discount. So overall, if I clear up the charts, I do expect price to get up to at least the daily drawn liquidity, but there's a weekly fair value gap up here. So I do expect price to get up to that weekly fair value gap, right? What other confluences are there to expect higher prices? Well, let's bring your attention to the premium. So we've looked at the discount. Let's look at the premium, right? So the premium is here, right? So the premium is anything above that 50% level. So the premium essentially gives us a large pool of liquidity to work with over here. So we have a large pool of trendline liquidity to work with, or internal range liquidity to work with, right? This also gives us reason to look for higher prices in the market, right? Another reason why I do expect price to get up to this weekly fair value gap over here, okay? So now let's go down to the 5-minute chart and begin to dissect a couple of and potential entries that you could have taken, right, on this particular market, right? So where are we? Let's dissect price action. Okay, so we understand that we're in a daily discount, so we should be looking primarily for buy trades. Okay, so here's how we could get involved in a couple of trades. Okay, the first trade over here, right? So we initiate with what we call the Asian range. Now the Asian range, as I've explained in a lot of my videos, is typically a low volume time of day in the market. So the Asian range operates from 8 p.m. to midnight New York time or Eastern Standard Time. So the purpose of this Asian range is to accumulate liquidity. So this is the accumulation of liquidity in the market, right? Accumulation. So this builds liquidity, excuse my spelling, right? So now, what do we see? So let's begin to dissect how price behaves in this region, right? So now that we've had the Asian range get now that we have the Asian range get developed, right? So this is now our liquidity pool. Now from here, for price to go up, we need to see price will go down to go up, right? So when we see price giving a range, i.e. the Asian range, price will very typically go down before it heads up, right? And the reason why it does this is to create what we call that Judah swing in price. The Judah swing is simply the manipulation. That's all it is in the market, the manipulation. So the manipulation I normally label in yellow, and the manipulation over here corresponds very typically in that London session, right? London or early London, so Frankfurt session, right? And that gives us the manipulation of the market. Price will trade down before it trades up, right? So this now becomes the manipulation of the markets over here. So when we talk about the AMD cycle, the manipulation is that second, is what the second letter stands for, the M for manipulation, right? A for accumulation, right? So this is A, accumulation, right? This is accumulation, manipulation, and we look to buy the distribution. So how do we look to buy that bullish distribution after we've had a manipulation? Well, it's quite simple. We want to look for a shift of structure to the upside. So we want to see a clear shift. So from here, we have a shift of market structure just over here. So this is our MSS, our market structure shift, or our break of structure. It all just means the same thing. So now that we've had a shift of market structure, that's one of the 3 rules we look for an order block. So if I bring your attention over here in price, once we've had price break structure to the upside like this, so we've had that shift of market structure, MSS, what we have over here and over here, we're looking for price to come back into key off a fair value gap in a discounted zone before heading higher. So what we do is we mark up our Fibonacci tool from a swing low up to the swing high, and our job is to key off a fair value gap in the discount. So we want to key off a fair value gap, having our stop loss below the Judah swing, and our job is to simply key off a fair value gap, just like our AMD entry suggests. So here on the US oil, what we had is we had a shift of market structure, right? And we had price giving us a new structural range. So we had price shifting structure here, and we had price shifting structure here, and we had another break of structure over here, right? So we're looking to key off a London fair value gap, okay? Very important we do this. See, now that price has given us a swing low down here and a swing high up here, right? So let's look at our rules for an order block. We have 3 rules for an order block. What are they? We look for a shift of market structure, or a market structure shift, MSS. Then we look for price to give a fair value gap, and we look for price to be in that discount, which is where we want to look for buys in the first place. Notice here how we have a fair value gap over here. So this fair value gap here in blue represents an area where we want to be looking to buy from, and notice how it's below the 50% level. So this is the equilibrium, right? So we're looking to key off a fair value gap below the equilibrium, okay? And this is our classic AMD model. A safe place to keep the stop loss will be below the Judas swing, or you can have it slightly above. And where do you target? Well, typically I target 1 to 2s and 1 to 3s because you don't need a high risk to reward. And this trade, I believe, ran to a 1 to 3 or even 1 to 4, right? 1 to 3.5 hour trade, okay? Using the concepts of an OB with the overall accumulation, manipulation, and distribution, right? So if you like this video, give it a like and thumbs up. Just to give people a heads up that we're offering free one-to-one sessions here at LiquidFX. So for those who are interested, feel free to drop me a video. There'll be a link in the YouTube description as well. And you can just sign up if it's something you're interested in learning these concepts, these ICT concepts that have been simplified for each and every one of you to join, and you're entitled for up to 12 one-to-one sessions depending on which package you book. So if that's something you're interested in, feel free to DM.